Hello everyone, Paul here. Today I'm going to be talking about a strategy that is pretty effective. I've talked about this strategy for the previous videos I use it for the US 30. Today I want to use this same strategy for doing it with crypto and kind of show you how it works, what I've observed. Doing this strategy, you need two indicators. You're going to need your linear line strategy, and I've made separate videos on that, and I'll link you to some related videos on that on my description. And there's also the Andean Oscillator that's required for this strategy, and I'll show you how to use both when trading crypto and how to benefit. It is a little bit more volatile than so when you're looking at trades, it might be a little volatile. But we'll look at a couple cryptos and see, once we plug this formula in, on how to use it to your advantage. Now, me personally, I'll trade crypto with Forex. It seems to be the easiest way to do it. You watch my other videos on how to set it up with Forex. I'm not going to go over it in this video today. I'm just going to go straight to it. And we're going to see how to plug in these two indicators to see how it will work to find moments of buying in for longs and moments of buying in for shorts. We'll look at Bitcoin, and we might look at some other assets as well with crypto. Okay, so to set this up, you're going to need to have your linear regression candles here set up. So the first thing you need to do is you need to check off your regular candles. So you notice here they're on, and now you hide your regular candles. So then you got to set up your linear candles. Go to your favorites. Well, my favorites. Just look for linear regression candles by this guy right here, and click it. And once you do, you can change the colors if you want, but the most important thing here is the plot line. I like changing it to white or yellow, something that stands out. And once you do that, you'll have it set up, and again, make sure your regular candles are hidden. That sets up the linear candle strategy. What you'll notice is there's a smoother line that kind of goes through everything. It's easier to pick up if something's bullish or bearish. And the next thing you want to get is your Andean Oscillator. So I have it already set up, but I'll show you how to get it here. You go to Andean Oscillator. It's right here. I'll show you what it looks like by default. This is what it looks like by default, but what I do is I change the settings. For the bullish here, I make a bright green. For the bearish, I make a bright red. And for the signal, I put white. And that's how you set it up. And that's how you get this whole layout set up. So the way I look at this is I look at the signal line as like I consider the signal line like a finish line, and what you got is your reds and your greens. And whichever one is the closest to the signal line is the one that's winning as far as direction. So what I do here, and we're going to look at Bitcoin, the key points here that I look at, and I trade on the hour. So my trades, I don't do any trades on shorter time frames with this strategy. I focus on 1 hour or longer. So when I'm doing my trades, my signal to get in is either if it's crossing up. So basically, we look for three different things. The first thing we look for, which is probably the most profitable part of it, it's when the reds and greens are crossing each other. So what you want to find when the reds and greens are crossing each other is which one is closer to getting to the white line. Which one is closer to getting to that finish line, the white line, the signal line. So in this scenario, we find a moment when it crosses, and we find out which one's getting closer to the white line, and that's what we focus on. We also, at that point, look at the linear lines and seeing if the candles are above it or below it. So that will confirm it. I'm on the weekly here, but that will confirm it. What we want to look for is it crossing with the reds and the greens, and whichever one is closer to the finish line here is the one that's winning. And you want to confirm it twice by looking at your linear line and seeing which direction the candle's going. The candle's above it, it's bullish, so they both need to match. So in this scenario right here, you know, we see red going over the green line, which means in that scenario with the Andean Oscillator, the red is winning, which means bears are winning, and then the linear line is down, the candles are below, so it kind of matches. But, you know, it is more volatile. So that's the first thing you need to look for, is whether it's, you know, crossing with the reds and the greens. The next thing I look for is a crossing with a green crossing up or a red crossing up. If a green is crossing up, that means it's in a bullish trend. If the red is crossing up, that means it's in a bearish trend. So we'll get a couple examples here. Get a couple examples. Right here we see that the red is crossing up, so this is a bearish moment, and we can confirm it by looking right here when it crosses. We could see that it is also below the linear line, and we could actually enter the trade. We could enter a short right here, and we could basically write it out till it touches the linear line again, and this is a short position. So let's look at a couple examples here. We see the green line going through the signal line right here. So this is a signal of a uptrend. You see the linear candles are above the linear line, so this is confirming it twice that it is a uptrend. So this would be a good move to do. If you wrote it right here, you could do a long. Can you write it out till it hits the linear line again? And this could be some profit right here. Now, what you want to keep your eye open are for consolidation periods. Now, what I want to go over this real quickly. I do not trade when the red line is going down. When the line. I only trade when the line is going up on the signal line. If it's going up on the signal line, I'll put in a trade. But if it's going down, either with the green or the red, I do not trade, because those are retracements. If your red is crossing down, it is a retracement and it is going up. If the green is crossing down, it is a retracement and it is going down. But it's very short-lived. You'll get better results if you focus on the red or green line, focusing on going up on the signal line, or when the reds and greens are crossing each other. You'll get better results that way. So let's just look at some other examples here that we look back. Now, I only do this on the hour because I think it gives you better results. So, I think we already did that one. So right here in this example, we see the reds and greens are crossing, the green is winning, and you can see you could basically stay in this trade until the candles touch the linear line again. It's a very small one. Let's look at another example. Right here we see the green crossing up through the linear line, the Andean Oscillator. So this is a signal right here to do a trade. You come in right about here, because this is where it's starting, and you basically write it out till it touches the linear line, which you'll get a little bit of profit there. So let's see, let's check some more. So right here you see the red line crossing up. This is a signal of a downtrend. You also see the linear line of the candles are below it, so that confirms it. So you could get in right here for a short position, right about here, and then you basically just wait till it touches the linear line again, which is right here, and this is your short position. So just for basically, if you're trading this on Forex, and I want to give some examples here. What you want to calculate here is this is a 154343. 154343. This right here is this is the amount of pips that you got in that trade. So if you did this at a 0.01, you would supposedly made, this trade alone would have made $1,543 at just doing that one. Now, I like doing it at like 0.05. That will give you even more. So anyway, I want to kind of show you guys how to find better signals using this strategy. So we'll look at a couple more, and I want to look at maybe a couple other cryptos as well. So right here, you see the green line going through the signal line. You also see it on the linear candles here, and this is a strategy. So you basically come in here until it touches the linear line, which is right about here. You made some profit right there. And this is a brief one right here. You see the red line going up through the signal line. It comes through right about here. You ride it out till it touches the linear line, which is right about here. This is a little bit of profit here. So let's look at two more examples with Bitcoin. We see the green line going through the signal line right here. And you also see the candles are above the linear line. So this is a good strategy right here. You ride it out till it touches the linear line right about here. And you made some profit there. Now, like I said, when the green line is going down instead of up, it is a retracement. So basically, the green line going up through the signal line is the sign of a bullish, and the red line going up through the signal line is a sign of bearish. But when you have a green line going down through the signal line, that is a retracement it's a bearish movement. When you have a red line going down, it is a retracement of a going up. So you could do those retracements, but they don't last long, and I don't bother with them. You'll get better results if you focus on it going up through the signal line. But if you guys want to do the retracements, that's up to you guys. Let's just do this last one right here for Bitcoin. You see it crossing up right here. You see it up on the linear line. You ride it out till it touches the linear line. This is profit right here. So let's look at a couple cryptos. Let's look at Ethereum real quick. I'll do Ethereum and maybe another one. Let's look at Ethereum. Now, when you're trading and you're trading crypto on Forex, what you basically want to do, and the formula to making $100 a day just trading crypto here, is you have to find a crypto that goes up about $20 a day. You have to find a $20 difference, and you have to do it at a 0.05. If you do this at a 0.05 with a $20 difference, you'll make $100 a day doing this strategy. So, at 0.05, $20 difference, that's a 2,000x in Forex. That's $100 a day. So if you can consistently do this strategy, you'll make $100 a day. Just thought I'd throw that one out there. With Ethereum, it moves right now about I think about 300. I want to real quickly look at how much it moves per day. Just real quick. Not as much as Bitcoin, but still. We got this yesterday was about $255. And we got 221. So roughly $200, $300 a day if you can get it in that range. All you need to do is get to $20 a day. You have to find a move for $20 a day with a 0.05 Forex. You'll make $100 a day. So anyway, let's look at this strategy for Ethereum. Okay, works the same way. Red line going through the signal line right here. Now this is weird because you're looking for you're trying to confirm that it's going to be going down, but you see it kind of right here. It's passing through. So this is not a good trade right here because A red line, it's showing you that it's a bearish moment, but it's going up. So it doesn't always work. You got to be cautious of that. But let's look at another one, see if this works pretty well. It's not a 100% strategy, so just keep that in mind. No strategy is, 100%. Now right here we see the green. Well, we're not going to be focused on retracement, and this is a retracement. So let's go and look at. Okay, so right here we see it crossing the signal line. So this is the sign of a bullish moment. So if you rode this out from here and you waited till it crosses the linear line again, so right about here to here, you're looking at this is a 30,000 pip move in one day. Let's look at a couple other examples. First, we want to look at it doing it in the Andean Oscillator and seeing if we could find it. So right here we see the red line crossing through. And so right about here, this is a brief one. Ride this out till it touches the linear line, which is right about here. This is a $48, so if you did this is 4858. So this is 4858. If you did this in 4x at a 0.05, you made $242. So I'm going to do two more times here. We got to find a crossing. Now, the best results here is if you focus on the greens and the reds crossing. So I'm going to look for a couple of those. Right here we see the reds and greens crossing. The red is closer to the white line here, so it is obviously a bearish moment. So if you come in right when it crosses, right here, and wait till it touches the linear line right about here, you made 163.70, 183.74, 183.74 times 0.05. This is almost $1,000 move. Let me do one more time with Ethereum, and then I want to look at one more crypto with this strategy. So we see the green line crossing through the signal line right here. We get in, we wait till it touches the linear line, which is right about here. 8908. 8908. If you did this at a 0.05 and 4x, you would have made $445. So let's real quickly look at one more crypto for this strategy. Let's look at, what's something that has some pretty good volume. Something to do with crypto here that has a lot of volume. Probably. Let's look at Solana. Solana pretty much has some good volume. And you could probably trade Solana in Forex too, so just keep that in mind. You just got to look around. So anyway, this works the same way. What we want to look for, you want to look for when the reds and greens are crossing, or when the reds are crossing the signal line, or the greens are crossing the signal line. So we see the red crossing the green right here, so this is a good point to get in, or you can also get in right here. So for this example here, we're going to be doing red crosses right about here. You also see that with the linear line, and you see the candles are below it, so that's also another good indication. So you write it out till it touches the linear line right about here. 444 pips right there. Good trade right there. And you see the green line going through. Well, you actually see it crossing here, which is another sign. So you can get in here, or you can get in here when it crosses the signal line. Either way, you'll be in profit. So if you get in here where it crosses, now you wouldn't get in here because it's below at this point, so I probably would get in when it crosses the signal line, which is right about here. Get in here right about to here. This is 430 pips. So this is, the moves on Solana here are not as big as Bitcoin and Ethereum. But let's look at, I'll do 2 more times here. We'll see if we can find any big moves. Right here we see well, this is a retracement, so we're not going to focus on that one. We see the red crossing through the signal line right here, so that this is a signal of a downtrend right about here. So you come in here, you also see the candles below the linear line, which is another confirmation. Ride it out till it touches the linear line, and this is 1,164 pips. So anyway, you see that this strategy works really well. It works for crypto. Crypto is just a little bit more volatile than doing it with like stocks and things like that. So you just got to be more cautious when you're using this strategy with crypto, because crypto is a lot more volatile. So anyway, if you guys like this strategy, make sure you hit the like button, leave a comment. I will be going over this strategy for stocks coming up, and I'll probably use it for, we'll look at gold as well, maybe platinum, maybe copper, maybe some other assets here. I'm going to be applying this strategy, and we're going to look at it in the next coming videos. Other than that, if you guys like this video, hit the like button, hit the subscribe button. I'll see you guys in future videos.